Hello and welcome to Markets Today. I'm Surabhi Upadhyay, and expiry day has finally gone by with not too much of damage, and the bulls not quite taking control of the street, but nevertheless trying to claw their way back towards the afternoon session. Lots to talk about, plenty of opinion coming your way over the next half hour, but first let's start with the headlines. Volatile trade on expiry day. Markets managed to recover from afternoon lows, though benchmark indices still end in negative territory. The Nifty sees a 15-point cut but closes above 8,300. The Sensex ends lower by 0.2%. Pharma, metal and bank stocks see pressure. Mid-caps underperformed blue chips with the index falling 0.4%. Bank of India ends down 6% as asset quality worsens. Tata Global Beverages and Bajaj Hindustan also end weak on lackluster earnings. However, Gammon Infra surges 12% after the RBI increases the company's FII limit to 49%. A day of big earnings. ONGC misses the mark in the fourth quarter as profit falls short of estimates, margins contract and EBITDA drops 17%. On the other hand, benign crude prices help BPCL post a strong performance. Top-line EBITDA and profits beat estimates and margins improve over last year. And staying with earnings, Hindalco posts a mixed bag of numbers with top line growing 11%, beating estimates thanks to improvement in the copper business. Net profit and EBITDA, however, trail expectations.
All right, those were all the top headlines, and here are the experts that we have lined up for you on the show tonight. From the policy space, we have Coal Secretary Anil Swarup, who will talk about the government's plans for ramping up coal production. Ajay Srivastava of Dimensions Consulting will join in with his take on the markets. Sudarshan Sukhani will talk about the technicals, and we'll also get you the managements of some of the companies that declared their numbers today. All that coming your way in the next half hour. But first, let's turn our attention to the markets today.
Well, weak earnings and the futures and options expiry proved to be quite a heady cocktail for the bulls, but they did withstood the bear attack as markets ended a volatile session with only minor losses. The Sensex lost just around 50-odd points to cling on to the 27,500 mark. The Nifty also defended the 8,300 level after some wild swings, especially in afternoon trade. Mid-caps marginally underperformed, with that index losing close to 0.5%. Anuj now joining in with all the details of today's action. Anuj, bulls still not really able to shake off that sluggishness?
I mean, it was quite a volatile day today, and it was expiry, and the series itself was so volatile that you would have expected expiry also to be volatile, and that's what happened today essentially. Also keep in mind, today there was a big talking point in terms of what was happening in China. The Chinese market was down about 7%. And of course, earnings didn't look good at all today. Through the day, we were struggling to find even a single good earnings, and all of that resulted in the market feeling the pressure. In fact, for all practical purposes, the Nifty was trading below the 8,300 mark. It's just the last 3 to 3:30 adjustment or the surge at 3 p.m. that brought Nifty back above 8,300, but that should not count for much when we start trade tomorrow. Let's talk about some of the stocks that led the market down today. Pharma stocks were down, whether it was large caps or mid caps. So stocks like Cipla, Sun Pharma, Dr. Reddy's, they were all lower by about 2%. Apart from that, some other prominent Nifty losers included Mahindra & Mahindra ahead of its earnings. That stock was down 2%. Bharti and Lever were down about close to 1%. And among the large cap or the heavyweight stocks, Reliance was down 1%. ONGC ahead of its numbers was down 1%. Numbers came out after markets and didn't look too good. And State Bank of India was down about 1%. On the gaining side, these three stocks really led the market recovery in the last 30 minutes of trade, purely on expiry factors. Stocks like Infosys, ITC, Tata Motors, all up by about 1 to 2.5%. Outside the index, though, a lot of F&O stocks were losing big time. Stocks like Wokhart, that was down about 9%. Jindal Steel, down 9% as well. Bank of India was down 6%. You could add an Adani Enterprises as well, that was down 7%. And some other stocks which looked quite good today on the mid-cap side included Arvind, that was up 6%. Amtech Auto was up 5.5%. And UCO Bank was up about 4%. So that's the series. It was a bit disappointing the way it closed, because for the better part of the series, it looked like bulls are making a bit of a comeback. Will be interesting to see how the markets react on the first day of new series, because it will again have to digest some of the bad earnings.
All right, we'll have to digest some of the bad earnings, and yes, it's been very ugly this last leg of the earnings season. But on that note, let's bring in our first market voice of the show today. Ajay Srivastava, the CEO of Dimensions Consulting, says the biggest trigger for the market right now is the potential rate cut by the RBI and any other positive initiatives that the RBI is expected to announce on the 2nd of June. Listen in.
25 basis point doesn't break the bank. I think we need a serious amount of initiative from the RBI governor to get the economy moving. It's not going to be 25, it's got to be 50, it's got to be aggressive, it's got to get credit down to the people. RBI has to come up to the plate and match that, or at least cover it up, because the government is depleting the consumption story very rapidly. RBI has to come and boost the consumption story. I'm not a great favorite of mid-cap by and large. Too high risk and too less returns buy. Yes, there have been few cases, and this is what I'm saying, in a universe of 2,000, if you pick up 20 or 40 or 50 people who've done well, the chances of picking that pick is so difficult. Among all the stories that you see, I think pharma mid-cap is the story you want to be definitely in, and IT mid-cap is the story you don't want to be in.
Okay, let's now shift focus to all the earnings action today, and there was plenty of it. Hindalco and NMDC announced their fourth quarter numbers, and we have Nigel D'Souza standing by. He's been doing lots of number crunching today. Nigel, let's actually start up with the NMDC first.
All right, so in terms of NMDC, we did see that the numbers were always expected to be weak. But if you want to pick up one bright spot, it had to be in terms of the top line. The top line came in at around 2,800 crores, plus we were estimating a number somewhere between that 2,600 to around 2,700. So that was really the only positive in the numbers. If you take a look at the operating margins as well, they fell down all the way to around 50%. Remember, NMDC at one point of time used to give you operating margins of around 70-75% plus, and now that number's come down all the way to around 50%. That's because of a couple of expenditures. If you just take a look at that, the royalty in fact has spiked up. It used to be at 10%, now it's at 15%. That's visible in those numbers. And other expenditure as well did pop up if you look at it on a year-on-year basis. Profitability as well, if you just look at it, it got a lot of support coming in from the other income. If not for that, in fact, we would have seen the profitability see a lot of pressure. But the other income jumped up by close to around 37% if you look at it on a year-on-year basis. And the contribution to the profitability was far more. So because of the other income, we did see that the profitability jumped up. More or less a very, very disappointing set of numbers. But let's shift focus to Hindalco. Now that one came in during market hours, and it was really a mixed set, because on the top line there was a big beat of close to around 10%. We were estimating flattish numbers. That didn't really happen. It came in excess of around 9,000 crores. So that was the positive in the numbers. That's because, just take a look at the aluminium revenue. That's jumped up by close to around 37%. Definitely getting a thumbs up. The copper revenue though, that came down a tad bit. That's because the realizations and copper prices have been under pressure. The total expenditure though jumped up by 12%. You're comparing that with net sales that jumped up by only around 11%. So that clearly indicated that there was going to be pressure on the margins. We were estimating a number of around 10.5%. They came in only at around 9%. And if you take a look at the breakup, you'll see the aluminium EBIT margins came in sub that 8%, and that compares with the number of around 11.6%, while the copper margins on the back of better TCRC margins, we did see that one pop up. But take a look at the power and fuel costs. That soared up by more than 50% on a year-on-year basis, and other expenditure as well was higher, clearly telling you that there was some pressure on the aluminium business, and that's why the margins missed street estimates. The profitability as well did come in lower by nearly around 36%. It looks like a bad number, but there were a couple of factors that played out of there. Finance costs ballooned up by more than 100%. We did see this time around there was a tax paid. If on the same quarter last year, there was a tax credit, in fact, and big exceptional item over there. That's on terms on the account of some of the Supreme Court verdicts and rulings. So that's why there was an exceptional item of around 150 crores. So because of that, in fact, we did see that the profitability got hit. But mixed set of numbers, top line, big beat, margins under pressure, while profitability was hit because of exceptional item. Back to you.
Aluminium business will continue to face pressures because of structurally higher than envisaged coal prices and sharp drop in premium. I'm talking about the Indian market. Outlook for copper business broadly is positive. On the back of favorable TCRC, I believe TCRC will hold even for 2015, and I am expecting a robust performance of the hedge in spite of the fact that some of the export-related incentives have been removed.
All right, so it was a weak operational performance for Hindalco this quarter, but from the oil marketing space, in fact from the oil and gas space, it was a mixed bag. ONGC disappointed with a plunge in its profits, but BPCL on the other hand beat street estimates. Varinder Bansal is here to give us his analysis. Varinder.
Well, Sonia, there was lots of hope which was there on the oil and gas space, especially after crude was falling down. That is why, especially on ONGC, where we saw that the company will not be sharing any subsidy in Q4, which was there. Remember last quarter in the same year, FY14, they paid around 13,500 crore. So people were expecting that the net realization could be as high as nearly $53–54 per barrel. But clearly, the net profit number has clearly disappointed the street for ONGC. Only 3,900 crores coming over there. Analysts on the street were expecting anywhere between 5,000 to 7,500 crores. So this is even lower than what market expectation was. If you just see EBITDA, CNBC TV 18 poll suggested EBITDA of nearly 11,000 crores, around 11,000 crores, and it came at only 7,600 crores. So sharp knockdown in terms of EBITDA also happening in there. The margins were clearly way down, 35% compared to 43%. And as I said, there was no subsidy provided by the company. Still the net realization, what we are hearing, could be below $50 per barrel, which is not a good sign. So expect a downtake on the stock tomorrow in the morning. BPCL or most of the OMCs, we are expecting good set of numbers coming in. BPCL, good strong operational numbers coming in over there. Year on year, if you have to compare, that is not a right comparison clearly, because in Q4 of FY14, there was huge subsidy which was given to the company, and that is why you will see the performance not good. But sequentially, there's a huge improvement which is seen in the performance. Total income has come around 51,000 crores, EBITDA at nearly 4,500 crores for the company, and EBITDA margin at 8.8%. The most important number is the GRM number for BPCL, which has come around $6 per barrel for the Q4. Most of the analysts on the street were factoring around $3 to $4 per barrel, but $6 per barrel is an interesting and important number which has come up for the company. We are waiting for the marketing margins to watch out for, but people on the street are expecting it to be anywhere between 2.2 to 2.3 rupees per litre for BPCL. Clearly, operationally good set of numbers coming by the company, but ONGC disappointing on the margins and the net profit number.
Okay. All right. Thanks, Varinder, for that. Well, that's the gist of the oil and gas numbers that came in. Good numbers from BPCL, but disappointing numbers from ONGC. That's not all. In fact, the market saw some strong up moves today from the likes of Godrej Industries, AstraZeneca on the back of good earnings. Mangalam Malu joins us now with a wrap-up of all the stocks that were in the news today. Mangalam.
Well, indeed, thanks a lot for that. As we move towards the end of the earnings season, the earnings street today had a lot of traffic. I've tried to pull out a couple of stocks that were in focus on the back of earnings. Among the stocks that were reacting to earnings that came in post-markets yesterday, we have Jindal Steel and Power. That one lost about 8.5% in trade today after their operating profit came in lower by 40% at 789 crores. The operating margins also came in lower at 17% versus 27%, which is actually a 6-year low. AstraZeneca Pharma, on the other hand, had a good quarter. That stock gained about 14% in trade today after their total income came in higher by 48%, while the net profit also came in at 38 crores versus a loss of 2.5 crores last year. But AdLabs Entertainment had a bad quarter. That stock ended lower by about 10% in trade after the finance cost came in higher by 24% to 31 crores, and they posted a net loss of 31.1 crores as well. But among the earnings that came in today, Page Industries surged later in trade as their numbers came in. The total income up higher by 34% at nearly 380 crores, while the net profit also came in higher by 34% at close to that 47 crore mark. Finolex Industries, on the other hand, had a weak quarter. That stock was under pressure in trade today after they posted an EBITDA which was lower by 33.5% to close to that 68 crore mark, while the operating margins also squeezed to about 8.7% versus 12.2%. Godrej Industries, on the other hand, had a good quarter. They consolidated total income up about 15.9% at 2,300 crores, while the consolidated net profit also came in higher by 22% at close to that 139 crore mark. We additionally spoke to the management, Mr. Adi Godrej, so let's also hear out what he has to say.
Despite the difficult economic situation in the last financial year, our performances of all our businesses have been quite good, and we expect this to continue well because we expect the economic performance to be better in this financial year, and particularly in the next financial year if GST is introduced from the 1st of April.
Now, that was Adi Godrej, but Bank of India was another stock that faced some pressure. The net interest income came in at 2846 crores versus 3047 crores last year, and the asset quality also worsened quarter on quarter. The gross NPA came in at 5.4% versus 4.07%, and the net NPA also at around that 3.4% mark versus 2.5%. The management also laid out the details for us.
Given the stress in the economy, the gross NPA of the bank has increased significantly in the last quarter. The same stands at around 5.39%. I would like to point out that most of these, over 90% of these accounts from the record of recovery point of view are in order, but we have decided to classify these accounts because of the irregular recovery patterns coming after more than 90 days. So most of these accounts, we have decided that we should recognize so as to bring pressure from those borrowers to set their house in order.
Well, that was the management of Bank of India, but ahead of earnings, a lot of stocks were under pressure. Container Corporation lost about 3%. Wockhardt Pharma lost about 9% after that huge surge yesterday in trade. Auto Pharma, United Breweries and Dhanlaxmi Bank, all three stocks were under pressure ahead of earnings. With that, back to you.
Okay, Mangalam, thanks so much for that. Well, let's now turn our attention to the policy space. In an exclusive interview with CNBC TV 18, Coal Secretary Anil Swarup said that the ministry will continue to improve the infrastructure through increased rake availability. Here's an excerpt of that conversation.
Yes, 5 mines have already started production. Others, as you would understand, there's a lot of paperwork and actually physical handing over of one mine to the other. It's taking a bit of time, but I think next 15 days' time, the Schedule 2 mines should get going. Schedule 3 obviously will take more time because a lot of groundwork will have to be done in terms of starting mining there. Schedule 2 mines, the mining was already happening, and as I said, 5 are already mining. The rest of them will also start mining in due course. Apart from the commitment of railways with regard to around 230 odd rakes that are supposed to be presently made available, we are looking at another 200 odd rakes that Coal India will buy and will add to the existing coal rake capacity that we have. But this will happen over the next 4 to 5 years. We've already entered into an arrangement with railways. Coal India board has already decided to place orders for 30 odd rakes with the railways. The overall investment, the capex this year that Coal India has kept is about 6,000 crore.
All right, we'll take a break on that note, but coming up, Sudarshan Sukhani will give us a check on the technicals of the market and we'll get you some more stocks to watch out for.